Good morning, America. Thank you for watching Taxes Made Easy here on the smartmoneyculture.tv. So, we're going to be talking about debt. Oh, that fun, wonderful word, debt. Mainly debt facing our national government and how that's going to affect our pocketbooks. But more importantly, how do you handle your personal debt and how is that going to affect you when dealing with IRS and state taxes? So, I get the same question all the time. What should I pay off? Should I just pay my taxes? Should I pay off other debt? How should I address this? And it all depends. And so moving debt around can be a huge problem, but also paying the wrong debt off can cause a lot of problems and make it so you don't qualify for certain resolutions with the IRS and with the states too. So um, it's always good to get good information sooner, which is why we're covering this topic. And we'll be right back after this break. Welcome back, everybody. And here I'm Matt Guardian Tax Lover, or Taxes Made Easy. We're going to be focusing on personal debt and how that affects and can affect larger state and tax issues, or state and IRS tax issues. So, first of all, we're just going to dive into all the news, what's going on. It's been a long weekend. We had a wonderful Veterans Day yesterday. I hope everybody enjoyed it. I did. It's always nice to sit back and recognize our veterans. Um, Jumping to first article of the day, Bitcoin is through the roof. So again, topping 89,000. Euphoria over the Trump win and his support for cryptocurrency is just really driving it higher and higher. It's on track to hit 100,000 milestone by the end of the year. However, be aware Bitcoin goes up, it goes down. So again, it's just there's a lot of other cryptocurrencies that go with it, but Bitcoin has gotten pricier than ever. And whether or not it will stay high is a different question altogether. Uh, so again, it's a huge euphoria. I believe that Trump will really, he's supposed to go all in on crypto, and that has really boosted crypto to huge heights. And then it's not just crypto. If you look at the stock market, it's also still going up. Whether or not this is based on sound fundamentals or is this temporary is yet to be seen. But again, the stock market and cryptocurrency is reacting very positively to Trump win last week. Another good piece of news is an Australian billionaire announces relocation to the U.S. So someone that has talked to Trump. Here's his picture with Trump. It's Anthony Pratt is in the middle. Owns 70 factories, creating 12,000 American jobs, and also pretty much everybody in his family is a U.S. citizen. So he's moving to the United States to be with his family. Hopefully, this is the first of many, and the rest of the article kind of goes into it. Is it aligned with Trump's return to power? He already had his green card in the works for it for months prior to that. But as we have more favorable tax treatment for corporations, for wealthy individuals, this is something we have seen before where wealthy people will move. So again, he ran a recycling business that's become very, very profitable for him. And again, hopefully this continues. It's not all good news, of course. And that's one of the things I want to emphasize here is there's still a lot of rocky road ahead. And this next article highlights this. So again, Stellantis was just in the news for laying off 1,100 UAW employees, or United Auto Workers employees. Now they're laying off another 400 more. And again, there's rumors that the automaker might be leaving Michigan. So leaving Detroit, leaving Michigan, and that's again, a huge issue. It's not good for the state. It's not good for the country to have certain areas that are just left um, empty, and it hurts all kinds of people in the process. So this is Stellantis, excuse me, highlighting that it's continue to bleed jobs, lose money, and this latest round of layoffs could start as early as January 5th. And this is on the heels of them laying off 1,100 employees, Toledo employees. So, and again, they're temporarily laying off 1,600 employees at its Warren truck facility. So what's going on with Stellantis? Why are they laying off so many people? Part of it is, the cost of unions, but also they're going overseas. So this is exactly what we don't want to see happening. This is not good overall. And it's not just the Stellantis employees that get hurt. Ford Motor Company supplier that produces roofs, they've had to lay off people. And you have another, just list a few others that work with them. You have all kinds of, it's when an auto company moves or lays off people, they don't produce all this stuff. They have a web of people that work with them to provide all kinds of parts and specifically manufactured items for vehicles. So it's going to have a much bigger outsized effect, a much bigger effect than you would initially think on the area. Their earnings report, though, for Stellantis is down 48% as of July of this year. And so they're citing inflationary pressures and also a public rejection of the transition to electric vehicles. So again, this has been mandated and exacerbated federal and state taxpayer-funded incentives to go to EVs, and they're still taking huge losses on these vehicles, the production and sale of EVs. So again, this has been hitting automakers across the board, but Stellantis, I think, is one of the big ones. General Motors is also suffering, and again, it's they've been given billions of dollars in public grants, low interest loans, land and tax incentives, and what's happening? There's continued to shell tons of money with little to show for it. And again, they provide all this money out, and they never provided a comparable return on that investment. So again, it's concerning here. You want to help businesses, you want to save it, but if you don't have the underlying fundamentals to help businesses thrive, they're going down again. So again, the Rust Belt is continuing to struggle, and I don't see that changing anytime soon. So big news for the day: Republicans finally gain control of the House. We still have a few elections out there or contests that will be decided as they go down to the wire. But they just projected that the Republicans will win control of the House again. They will have a very narrow majority, just like last time. And again, they lost some in New York. They gained some elsewhere. And so it's going to be very, very close regardless. So this is a good news for Trump actually trying to get his economic agenda through. But again, it's been going to be very tight. We saw a lot of infighting, a lot of, again, big concern here, and this is going to be brought up later. Do we continue to spend, or do we actually dig in and fight to cut the budget? And when you fight to cut the budget, you get opposition from both parties. So really, you have this fight going on, not only in the House, but in the Senate. And we're going to really dive into that in another article. So again, it's just not only do you have them getting the majority, but you have to have another vote every 2 years. You have to have a vote to see who's going to be confirmed as the majority leader. Speaker Johnson has already faced one attempt, or survived one attempt to remove him from the Speaker of the House. And again, he got help from Democrats. They might not help him this time. If there's not enough votes, that Democrats could actually seize speakership. So it's going to be interesting to see what happens. And so it's going to be very interesting to see not only what happens, but how it comes out. So staying with this theme of political leadership, this goes to the Senate leadership. And one of the things that happened when Trump was first elected, and he's learned his lessons from what happened the first time, it took almost 2 years for a lot of his appointments to get actually put in place where they could actually start doing their jobs. And again, when you have a lot of political wrangling, this very much can be the case for most individuals. And if the Senate isn't willing to work with you, it's going to be a huge problem. And so you have 3 people contending for the Senate leadership: Mitch McConnell, John Thune, and John Cornyn. And ironically, John Thune, John Cornyn, and Rick Scott. Rick Scott is seen as the only conservative in the group, and again, they have by far the most support in the Senate. So not only do you have, so he's trying to make inroads while not picking someone he favors, but clearly wanting a more conservative person. But it's going to be interesting to see what happens. McConnell is finally stepping down, and I think I applaud that. Yay. But we need good leadership in the House and the Senate to actually cut expenses, to stop the spending and make some common sense decisions. And it's going to be very interesting to see what happens. They can win and still not do hardly anything. And the GOP is very good at that, even though they win not doing much. So, and here's the line where I emphasize the need for appointments, trying to get expedite confirmations for key positions as soon as possible. And the next thing that he really wanted to focus on is stopping Democratic judge appointments during this lame duck session from November to January. They're going to try to get as many as possible. They'll have to use the filibuster to stop it while they're still in the minority. But again, these are part of the issues facing the Trump administration, and a lot of the news is about how many people have been appointed or already being lined up for jobs. But like last time, Elon Musk came out and put on his Twitter that it could take 2 years or more to confirm the new administration. And by then, you have another election and things change. So again, we're hitting another break, but we'll be right back after this to continue the conversation. Welcome back, everybody. And we're going to jump to the next article here. And this is where we get a little bit deeper into the larger macro issues facing our country. Just because someone's elected doesn't mean things change right away. Like we were talking about with the recess appointments, trying to get people in and having them start to serve as soon as possible is key, because otherwise things can drag on forever, up to 2 years. And during that time period, you still have the same old people doing the same old thing. So it's going to be a challenge. It's not going to be easy. And again, this article is talking about the first great challenge is going to be controlling inflation. Why? Inflation supposedly is down. But what has the government done in the last year? Spent like crazy, 2 trillion. Plus, they printed over $1 trillion on top of it, and extra funny money, and put it out there. Why? Probably to goose the numbers and make the GDP look better. It's like candy. It feels really good in the moment, or like a huge jolt of caffeine. Feels really good in the moment, and then there's the crash afterwards. That's the problem with money, is that printing money and overspending it might feel good and might help the economy look good in the short term, but it does more damage than good in the long run. And again, we're to that place where we've gone through a round of high inflation, and just had a whole bunch of money printed heading up to this to the election, and we really need this reverse course in many ways, and it's not going to be easy. The inflation will probably stick around for another year or two, because that's just how inflation worked. Reagan, when he was first elected, the first couple of years, inflation was still very, very high because you still had the policies of the Carter administration going through to 1980, and he was inducted in office until 81. So you had um, the first couple of years, you still had all the effects from the Carter administration and very, very high inflation. It was only after the policies were implemented, the laws passed changing it, and then it took time for the effects to actually be felt, that inflation started dropping and taming down. It really was 4 years later when people were able to say, okay, when they were campaigning in 1984, Reagan had his famous Morning America ad. Morning America, are you better off now than you were 4 years ago? And the country answered in a resounding yes. But for the first couple of years, the answer probably was not yes. It was probably more of the same angst and frustration. So expect the exact same thing here. So it's coming back already, and we might face another wave of inflation through the summer. And this has been my frustration from both parties. We've had almost no honest talk about the reasons for this devastation. Nobody's really talked about it. Nobody's really focused on it. We've had some things here and there. The anti-gouging talk was ridiculous, especially when it came to targeting grocery stores. Economists on both sides of the aisle widely panned that and came out and said, "This is, there's no profit, very, very little profit margin with grocery stores. The price of food has gone up because the government's doing all the wrong things, not the right things." So, and again, it didn't resonate, didn't go anywhere. So one of the big things is energy. And this is something that the Trump administration, the Trump campaign and his surrogates have really pushed at the restrictions on energy. And yes, while that will help, right now the oil price is not high, but keeping it low and even lowering it will help overall with inflation, but it's not the root cause. So again, and I agree with most of what this article is saying here, what the author of the article is focusing on. You're absolutely going to have more inflation. For 2 years, the money struck at $6 trillion on the back of a wild spending bonanza by Congress, all of which was paid for by new debt. If you print more money, you will have inflation. It's like the most clearest thing. I mean, if one day you have $100 and then all of a sudden, everybody has $200, everything's going to, and you have the same amount of goods, the price of everything's going to go up. It's just, that's all it is. The more you print of it, the more expensive everything's going to get. It doesn't do anything to solve the problem. So this is why just throwing money at situations and to solve things usually is counterproductive. It makes you look good, makes people think you're doing something, but what you're really doing is you're taking money out of their wallet in the future in new debt, higher inflation, and to fund whatever programs you're pushing right now. And so again, it's never a wise thing. Should we have some slow increase in the of money supply? Yes, we don't want deflation, but again, that's um, a far cry from where we are. If anything, the Fed cut rates and then prices went up again. So again, they just cut it by another 0.25%, and let's see what happens. So far, prices have gone right back up. Mortgage rates are now up, which is the opposite of where most people expect it to go. So the market, just because the government's trying to force the market to go one direction doesn't mean it will. So money stock, again, is growing, which is the overall supply of money, thanks to the U.S. Treasury leasing designed to prettify the GDP ahead of the election. So, yeah, I mean, here it just looks at the Federal Reserve data through the years 2020. Again, here's COVID, pumped out all kinds of money. And then through 2021, up through 2022, we printed out the most. But it's gone down and then kind of crept back up. The emergency is over, but we're still printing money at extreme levels. So again, it's just this. Again, his main point is no easy fix to this. Lowering energy prices with more supply can help, but there's a point where you actually reduce supply because it no longer pays the bills to drill and refine. The clearest example of this is fracking. When the price was high, everybody wanted to get into fracking, but it's not the cheapest way to make money. So as price goes up, if the market's able to respond accurately, production goes up to meet it, and then that drives the price down and kind of self-regulates. So if we get rid of the government artificial controls on oil and gas production, it should lower the price. But again, there's a point where it only helps so much. So one of the points he makes right now is deflation should not be a political consideration. There's no threat of that right now. Ideally, the Trump, and this is coming from a very right-term perspective. I don't know if we want all of this. He's arguing to seek a fix to the problem of the Fed, such as permanently ending open market operations and debt support. Stop them from constantly playing with the numbers, printing more money, throwing out more debt. Long term, that would be very helpful, but it won't stop the problem that exists right now. And there's two things that he argues. First of all, single best strategy is to grow the government, grow the GDP. Dramatic tax cuts, capital income, and deregulation, which is the goal. But at the same time, you have to cut the budget. So cutting $2 trillion out of the budget is a good start, but it's not enough because, again, that just gets us to square one. If we balance the budget, we're still not paying down on our debt. And they have to be real cuts, not fake cuts in the rate of growth, which, again, people do that all the time. If we just decrease how much we're increasing spending, over time, we'll finally balance things out, but we've spent so much that it's the problem's growing. The amount of our interest on the debt is going up every single year. It's over 1 trillion now. Again, we need a comprehensive approach. Tariffs can help, but not everything can be covered by tariffs. So it gets really complicated. The Trump administration really does have a very tall order ahead of them. And to emphasize this, next article, Fox host pressuring the GOP representative, Byron Donalds, on Trump's tax plan. Now, if you look at the numbers coming out from the CRFB, Committee for Responsible Federal Budget, they're saying that all of Trump's tax cuts could cost $7.5 trillion, add $7.5 trillion to the national debt over the next decade. And they released reports on Harris's and Trump's tax plans, Biden and Harris would increase it by almost $4 trillion, and Trump by $7.75 trillion. Whose tax plan is going to do the most damage? Well, the only way out of this really is to grow the economy and cut federal spending massively. And one of the things that's not figured in here is the $2 trillion in cuts that Trump has proposed. But again, can't quantify that when it's just general ideas. And I understand why they haven't quantified and say this is exactly where we're going to cut. And they've named a couple things. The Department of Education is one of them. But again, we have estimates ranging from 1.65 trillion over 10 years or 15.55 trillion, depending on who you're asking. And again, Representative Donalds responded that these are based off static modeling. At the time they did the Trump tax cuts, everybody said it would cost us more money. It would just benefit the rich and be more expensive. And they claimed it would cost $5 trillion. However, revenues are up higher than ever under the TCJA. That's a fact. The CBO said the Trump tax cuts would cost $1.9 trillion over 10 years. We have more revenue than ever right now. It's over $5 trillion right now. But and his argument, so it's actually going to be a net benefit because the more you cut taxes, the more the economy grows. But that only goes so far. So last article, just to kind of summarize this is from The Hill, really setting a battle between deficit hawks and tax cutters. The deficit hawks are more conservative members of Congress, Chip Roy here being one of the key ones here. His argument is that we're already on one side of the Laffer curve. So again, these are some of the very similar estimates are all over the place. 4.6 trillion is the number they throw out here from the CBO, extending the 2017 tax cut, which I believe will happen. But they're saying that it will cost us, even though it's led to higher revenues than ever. And if he does all these others, they're claiming it could add as much as 15.5 trillion, per the CRFB. Now, they're figuring out how far do they want to go. But the bigger issue is all the Trump tax cuts in the world are not going to solve the deficit problem. And eventually we're going to have to raise taxes if our deficits get further and further out of control. And Chip Roy makes a very good point here. Not all tax cuts pay for themselves. And we're on the left side of the Laffer curve right here. So the Laffer curve, if you look at it, it's kind of diminishing returns, where it's kind of like a big half circle. So if you start off, there's a lot. When you first start taxing, you're not going to really damage the economy so much. The more you tax, the more that number goes up. But then it starts to plateau until you hit a high number where you start getting less revenue the more you tax, because you're just taxing the bejesus out of people, and it's just too much. But as long as you're on the left side, the more you tax, the more you get. And he's arguing that we're on that left side of the Laffer curve. So we might not get more. The more we cut taxes, it'll help people, it'll help stimulate the economy, but it might not produce more revenue for the federal government. And we have to do something about it. Again, Fitch ratings led to a downgrade of U.S. creditworthiness during the budget fights. And so you have a lot of issues going back and forth, saying to produce more revenue than less, but will that continue the more we cut taxes is another issue, and we still need to cut expenses more than anything else. So where can they cut? You had the ERC issue during the pandemic. You had, which is was designed to help businesses, but it's riddled with fraud. There's all kinds of issues with it. still being fought over years after when it was supposed to help people. You have the Green New Deal and Inflation Reduction Act that cutting that could save a lot of funds, but they really have to go broad-based and just reduce the size of the American government rather than placing a deferred tax on our children. And that's the difference here is instead of reducing the size of the government and living with our means, we borrow from the future. That's what we have been doing, and we have to reverse that. So again, it causes so many issues. And when I look at people's personal issues, I see the same thing. It carries over. What's happening in the federal side, Congress spending like drunken sailors, using debt as a tool to do whatever they want, throw money out to their constituencies or pet projects or whatever. In the long run, it just hurts people. So, and it hurts the American people more than anything else because they're the ones that get stuck with higher inflation, can't purchase goods, they can't, and it hurts the poorest the most. So inflation really is a tax that hurts the poorest the most. It makes it a harder struggle for everybody, which is what we've seen over the last few years. So when you owe tax debt, I'm going to switch gears and really talk about the topic of the day moving forward. How do you know which debts to pay off? What's a smart move? What's not a good move? And part of it is just getting good advice. So as I always say, if you have questions, you're not sure what to do, get some good advice and figure out what works best for you and your situation. So first of all, you have to understand the difference between secured and unsecured debt. So secured debt is something where if you don't pay it, something bad's going to happen. If you don't pay your car payment, what's going to happen to your car? They're going to take your car. If you don't pay your mortgage payment, what's going to happen? You're going to lose your home. So the IRS knows this. They know that you have to pay some debt. And so they will allow for you not only pay some debt, but to get caught up on some debt. If you need a newer car, if you have an older car that's broken down, not running, they will allow for a purchase of it. Purchasing a newer vehicle, though, is never the best use of your funds. But if you have to incur that payment, or if you already have a payment, you can use that. Some people will pay off a car note, and it will create equity and create more problems when dealing with the IRS. So unfortunately, the IRS does not frequently does not reward good financial planning. But it's how do we go about this to make sure that you still qualify for the best resolution possible with the IRS, and so you can take care of yourself and your family. So we're going to dive into the details when we come back after this next break and really go through which debt should you be paying and how to do it. Welcome back, everybody. So just really going to dive into some of the different kinds of tax debts, the most common and debts that face individuals. So when you're first looking at the case, what should I consider doing? When you look at the kinds of debt that you have and whether it makes sense, first of all, to file for bankruptcy, or it makes sense to deal directly with the IRS. And a lot of this has to do with the age of your IRS tax debt and state tax debt. If it's older than 2 years, you might want to, if most of your debt is older than 2 years or has been filed for more than 2 years, that's better said, it's been filed and assessed for 2 years or more, then you might consider filing for a bankruptcy if you have a bunch of other debt as well. And sometimes we see that where they owe hundreds of thousands of medical debt, they have other people coming after them. And even if you don't wipe out all of your tax debt in a bankruptcy, you can always deal with it later. It gets put on hold by the bankruptcy. And if you're smart, you can use that time to get current on your tax filings, make sure you're doing estimated tax payments, all the things that you need to do to resolve your tax debt. So you should always talk to, if you have a lot of other tax debt, talk to a tax attorney, but also talk to a bankruptcy attorney and see, okay, what makes sense for me? What makes sense in the long run here? So that's concern number one. Number two is, what kind of debt should you be paying off? But I mean, the first thing everybody wants to pay off is credit card debt. It's some of the worst debt out there, highest interest rates. You can really shoot yourself in the foot by paying off credit card debt. And the reason why is that the IRS looks at unsecured debt like credit card debt, personal loans, other debts like that. And again, that might be very valid loans to you, to family members, et cetera, that you need to pay off. But if you're paying off personal loans before the IRS or credit card debt, other unsecured loans, the IRS can say, okay, you took this money, you had a choice to either pay towards your taxes or pay off this personal debt, unsecured debt, credit cards. IRS tax debt has priority over Visa, MasterCard, even though Visa, MasterCard can be very aggressive. Just credit card debt in general, and interest rates can be outrageous. The IRS doesn't care what kind of monthly payments you're paying on your credit card debt. They don't care, and they're not going to give you credit for those payments because in their eyes, you should default on your credit card debt and pay them first. And that's the way it's always been. So again, that's nothing new. It's just how they're going to treat it. So don't run up credit card debt. Don't pay it off in large chunks. If you're just making the minimum payments, the IRS isn't going to make a big deal about it. They're just not going to give you credit for it. I've seen cases where we go through somebody's finances and they still have $1,000 available. I'm like, okay, where's the money going? I'm paying a personal loan. I'm paying off a credit card debt. I owe my mother, something like that. And it's just like, okay, this isn't going to go anywhere. So they're not going to give you credit for this $1,000. They're showing you're positive $1,000, and the money's going somewhere. It's just not going to a debt that they will allow for. One of the biggest mistakes I see people do is, especially for medical debt, they'll go in and they'll pay off medical debt with the credit card so that they don't owe the hospital, the dentist, whatever medical or eye doctor, whatever they need. They'll use a credit card, and then they'll be making monthly payments on the credit card. Horrible part about that is that the IRS will give you full credit for payments for your health. Not seen as necessary. So as long as it's reasonable, if you go out and you get your gold teeth or whatever, not so much. But if it's for your health and it's doctor recommended and ordered, you will get credit for, again, dental work, reasonable dental work, eye care. I mean, it's a great time to get some of that stuff done that you've been putting off. And then they will allow for those monthly payments if you're paying them monthly, or if it's a debt that you owe in a hospital emergency bill or surgery bill and you're paying on it monthly, you'll get full credit for those payments. But if you then go pay it off with a credit card, you get zero credit for those payments. So you can see how this can really hurt you moving forward. I had one case. I forget how much she owed. It was around, I think she owed around $90,000. And she paid $20,000 off on the state and the IRS. So she paid the state off, owed about $20,000. The state had paid the IRS down by another $20,000. She was trying to do all that she could and get the government paid as much as possible, figuring that it would be better to carry credit card debt rather than state debt or tax debt. What really happened is we did an offer in compromise, and she went from owing $90,000 down to $70,000, and we wiped out the $70,000 for her. But we couldn't do anything about the $20,000 she had already paid. And they're like, "Oh, thank you for the payment." And when we went in to do the negotiation, she didn't get any credit for the payments on her statement. If she would have instead set up an installment agreement with the state that creates a monthly payment, the IRS will give you credit for part of it. And that helps you qualify for a better deal with the IRS. And then with the IRS, we were still able to do the offer and compromise. And instead of having $40,000 in credit card debt, we could have helped deal with both cases, saved her money, and kept her away from the abusive interest rates that come with credit card debt. So you've got to be very wary when you're paying things off. Again, some of the biggest things: personal loans. If you're paying off your friends and family. If now, can you owe money with friends and family and be paying a loan? Yes. Does it work to go get a promissory note? No. But if you're purchasing a vehicle and you actually have an exchange of the vehicle, you have an exchange of goods, and you get that if you're buying a vehicle from family or something like that, and you get it put in a contract and you're making regular payments and you're treating it like a contract, an actual arrangement, that can work. That takes it from being an unsecured debt to a secured debt, but it has to be legitimate. It has to be valid. And I've had people that were using a family car, et cetera, and they wanted to purchase it and just couldn't afford to in the moment. And they were already paying their parents so much a month. Let's legitimize that. Let's get a contract. Let's get it put in writing and make it legally binding. Then they get full credit for it. Another thing that people do is they pay off vehicles. Paying off vehicles, well, that's good in the short term. I mean, it's good thing in the long term overall for your financial health. You get to lower your insurance rates if you feel comfortable with that. But you get rid of a car payment. The IRS gives credit for car payments up to I think it's just over $600 right now. So if you have a car payment and get rid of it, it might be the worst time to do so, because especially if you're looking at an offer and compromise, you then create equity in that vehicle a lot by paying it down. So you can pay it down to a certain amount depending on how much equity is in it, but you should plan this out. Talk to a professional, get guidance. How will it affect me if I pay down my car? And are there better debts that I can pay down to get in a better situation financially? Some of the other debts that people incur, student loans is a huge one. Anytime you're paying back the government, they love it, and they'll usually give you full credit for it. So if you have student loans, as long as you are responsible for those student loans, we have I forget the name of it, but there's a new loan where parents can sign on for their students' loans, for their children's loans in college. And as long as they assume liability for it, they'll get full credit for what they're paying on their children's student loans. And you can use that as an allowable expense to help you get a better deal with the IRS. That's the whole thing, is we want to focus on the loans that will help you reduce your available income, and do it reasonably. But if you haven't been paying on student loans, you've been deferring them, it might be the time to start paying on those. Get that, especially with again, with the change in the election, we're not going to have any more free student loan forgiveness programs, and most of the ones that were passed are getting smacked down anyway. It's just a matter of time till it becomes the final thing. So paying student loans is a great thing to pay off. Paying down court-ordered debt. So if you have any court fines, child support, alimony, as long as it's ordered by a judge, they will give you full credit for it. One of the things that you can do also is there's student loans, court-ordered debt. You can set up a term life insurance policy. You'll get full credit for that. It creates a monthly expense. You can stop anytime, but the IRS treats it as prudent planning, and they give you full credit for it. One of the big issues, the big areas of debt that I see, and people think of it as an asset, is whole life policies. Again, you're not going to get your same bang for your buck as if you were to buy term and invest the difference. You would get a lot more bang for your buck that way. And the IRS treats it as just a bad investment. So if you're paying on whole life insurance policies, you might want to review them, see what's going on, and talk to a financial planner about that. But at the same time, you're not going to get credit for any of those payments, and it can actually hurt you. If you have a 401k loan, that can actually be a very good way to lock up an asset. So if you have a 401k and you're still working for the same employer that the 401k is through, you can take out a loan against your 401k. And then the IRS, as long as you can't access it anymore, the IRS has to leave it alone. And then you get credit for the monthly payments. The IRS has been fighting that a little bit lately. Hopefully with the change in administration, they gain some sanity back again. But that's something that they typically have allowed in most situations. And any kind of mandatory payments, for pensions, et cetera, if you have a union job or a government job where they mandate that you have to contribute to your 401k or retirement system, you get full credit for that. So big takeaway here is if you're not sure what to do, call us. We'll give you free advice. What should you be paying down? What should you be getting rid of? Again, what kind of debt is good to hold on to and get on a payment plan over time, and that will help you get a better deal with the IRS, such as medical debt, health insurance. Again, if any kind of court-ordered debt, instead of just paying it off, sometimes you can use that for your benefit. So again, getting square with your debt can absolutely be key. It can make or break a case. One case where it was an offer and compromise. That's what they were going for. We first helped them reduce levy action, and then got them set up. And the plan was to do an offer and compromise, and they qualified for it until they paid off about $20,000 in credit card debt. The IRS is going to treat that as a dissipated asset. They had that $20,000 instead of giving it to the IRS, they paid off a credit card debt, and now their offer and compromise, instead of being a few $100,000 or a few $100 or $1,000, now it was over $20,000. And so it was just too much, and it didn't make sense anymore. So it really does hurt people if you don't get advice first. So again, I always love it when people come in early. What should I be doing? How should I be doing this? And we can help steer them in the right direction and make those decisions. So best way to get advice, you can go online. We have plenty of shows on how to pay debt, which debts you need to pay. You can always call us, 520-485-7371. And all these shows with all the links are going to be posted to our website at guardiantaxlaw.com. Just click on the YouTube link and it'll take you right to all of the previous shows. So again, we give out free advice all the time. It makes so much sense just to find out what your options are. Make sure you're paying things down, right? And one of the big things I want to really close on, and I hammer on this all the time, what is more important than paying down other debt? Unless it's something that's going to land you in jail or they're going to seize your assets immediately. Estimated tax payments. And if you've been owing year after year, making sure you're not going to owe moving forward is priority number one. Number two, you can figure out other debts instead of start paying on other debts that are allowable expenses, either secured or for your health, or student loans, child support, etc. So figure out which ones you can pay and not hurt your case. So first of all, estimated tax payments, then secured loans, other loans that they'll give you credit for. And part of that is setting up an installment agreement with other loans, like a state installment agreement. So you're paying the state to then get a better deal with the IRS. And there's times we flip that where we set up an installment agreement with the IRS to get a better deal with the state and do an offer with the state in certain states. So it all comes down to your situation. Where is your debt and what is the best strategy for you to get this taken care of? And then unsecured debts, be careful with them. Get a good advice first before you step in a bear trap, before you cause some problems. So thank you, everybody, for watching, and we will be back tomorrow to continue the conversation. But again, if you have questions, give us a call. We're here to make your taxes easy.